Well, we're joining here on Money Chat today, brought to you by Forward Path Advisory and Ananda Rasa Advisory. We've got the privilege of chatting to Shehan today at Elephant Advisory. So welcome, Shehan.
G'day,
Thank
everyone.
you for joining us today.
No problem. Lovely to be here.
And to kick things off, we'd love to get a better understanding of what you do, your background and journey. So
Yeah,
if you can give
absolutely.
a rundown, that'd be great.
No problem. I'll give you the brief rundown. There's nothing spectacular. Like most, I had a career that I thought I would love for a very, very long time. And then about 10 years into it, I didn't love it very much. And I took the plunge to start my own business. I took about 6 months off. I didn't really know what I wanted to do. I don't think when I quit, I had that many skills. So I ended up just doing a bit of finance work with some friends and family, and then got into mortgage broking, which is the business we have today. So Elephant Advisory is, gosh, 7 years old now. And we have a decent sized team now, which is great. We do accounting and mortgage broking. The team's about 25 or so, a majority offshore. But our primary work is just small business accounting and advice, and then mortgage broking for just general investment and residential property owner.
Excellent. And so when you started your business, you mentioned you had the 6 months off. What did that process look like? Leaving this job and then the 6 months?
It was really interesting. My wife and I both work at the same place. We're at ANZ corporate. It's a great job for all intents and purposes. I love the job. I love the role. I got to do a lot of things I thought I'd never do in my life. Bit of mergers and acquisitions, bit of private equity is amazing. But I think youth masked a lot of the tiredness of working in corporate bank. And I remember the day my wife and I jumped on a plane for our honeymoon. We both obviously worked in the same place. And she looked at me and she goes, "Oh, Shehan, I can't wait to spend more time with you on our honeymoon." I just went, "Whoa, that is not a good thing to hear." We just got
Mhm.
married, and my wife's saying it's great to spend time with you. And I said, in that trip, we kind of went to the US. I think it was about 5 or 6 weeks. And I just halfway through, I said, I'm not going back. I just can't. I don't think it's as financially good it is to have a job. I just think it was going to take a toll on our relationship over time.
Mhm.
And we didn't have kids back then, and we were thinking about kids. And just, so I came back and I handed in the resignation as soon as I landed. And I was very polite. I gave 5 weeks notice. And then the 6 months off was great. Like working the hours that I kind of used to work with. I didn't spend a lot of time with mum and dad, albeit they lived down the road. So I got a lot of time to spend with my dad, who was a bit sick, and it was just a great refresh. And then obviously you just get a bit bored. And I looked at jobs and stuff. I couldn't go back because I just didn't see a future in terms of like working the hours that we worked and that kind of stuff.
Nice. And what drove you to start your own business?
To be honest, the real truth is I fell into it. So obviously working at ANZ, everyone thinks that you do home loans and you just know everything about finance, which you don't. So my sister came to me and said, "Sean," and sister is 5 years older. She's like surrogate mum. She yells at me and she does a great job at it. And she came to me and said, "Sean, I'm buying a house. Can you help us get a mortgage?" And I'm like, "I have no idea how this works. Just go to the ANZ branch. Just they'll sort you out." And she went to the ANZ branch and they royally stuffed her. They just did everything wrong for the poor thing. And then she came back and just yelled at me at a higher decibel level and said, "What is wrong with you? You need to go do this." And I obviously, the great younger brother, did my mortgage broking course in sadly the 4 hours it took to take back then. I just did that. I did her loan and it was done. And I thought, "Oh, great, never do that ever again." And then just more and more people came, and here we are. I worked out of a Gmail account for the first year, no name, no nothing, until I kind of, yeah, just landed here.
Snowballed.
The strategic, if anyone out there is listening for a strategic plan that I had, oh man, it was not there. It was not there.
And
That's
so then what's your point of differentiation, I guess? Obviously, can you give us a bit more around why you would go to a mortgage broker in the first
Yeah,
instance, as opposed to, direct to the bank or, a financial institution like an ANZ, for example?
it is like there's this holistic concept in our world into the mortgage broking, which is like regulation drives a lot what we do. And there is a concept that we have in our regulatory work of best interest duty, and it drives every decisioning that we have to do. So my job is to provide the best product or solution for you. My job is not to work at the ANZ branch and give you an ANZ product. If I think that Westpac is better because it's cheaper, or there's a policy at NAB Small Business, I get audited to make sure I have given you that advice or that product. And obviously, ethically, we want to do that. I want to grow a good business here in Melbourne. So ethically, I do those things. But the reality is regulation derives a lot what we do. And then that kind of financial services landscape that we have. You walk into a bank, that might be great. The person in front of you might be amazing. They might sell you the right product, but the reality is they're selling one product. Our job is to not sell you the product. Our job is to tell you what's out there, the options, the pros and cons, and over to you to make that decision. So it's probably that vastness of our knowledge that helps a lot.
Yeah, no, that makes a lot of sense.
Nice.
In terms of differentiator though, like, yeah, it's a hard one. Like every mortgage broker I say has the same access to a panel, same access to same as insurance, and financial planning. They all have the same thing, but really the reason that we work with people like Rads and Joel and stuff like that is just I tend to think our team cares a lot about the outcome, which is a big thing.
Mm-hmm.
Yeah, relationship building is so important, isn't it?
Yeah, absolutely. Especially in professional services, and you think about the reality of the advice that you're giving, and someone is going to make a pretty massive life decision on that. You want to know that the person on the other end cares about that outcome.
Yeah, there's definitely a lot of psychology behind it, isn't it? With major life decisions such as home purchases.
Yeah, it's the biggest asset is generally that house, and the journey to buying, you probably do once or twice in your life. So there's no one person that is really expert at it. So you just need good people around you to bounce off ideas. I don't know everything either. That's why like I said, I think to have that board of advisors, your mortgage broker, your investment advisor, your financial planner, collectively you have a good people around you. Makes a big difference, I think.
Excellent. And how do current interest rates and market trends affect the home buying process? And what factors should potential home buyers take into account before choosing a mortgage?
It's a big one. I'm sure just like you guys and your clients, these rate rises causes a lot of financial anxiety. And I guess that's the job it's meant to do. The recession or whatever you want to call it is forcing you to take stock of how you choose your mortgage and how you choose your financial decisions. Interest rates are the primary driver of a lot of the costs people have in their household budget. So obviously our job is to find that best mortgage out there, ensure it's best priced, ensure we're keeping banks honest. It's really important, I think. When we talk about kind of choosing a mortgage product, we've got three lenses that we use. It's very, very simple. Rate is probably the first one. Like if it's cheap, it makes a big difference, especially on the compound nature of your mortgage. Policy, there might be a specific policy. Joel, you might earn income a certain way. Your partner is a nurse or a doctor. There's certain quirks that you need to access. And then relationship. You have to trust that we are here to try and improve that process. But the reality is now when rates were 2%, didn't matter. A lot of the things didn't matter. People took that laxed approach. But now when they're a big cost out of your lifestyle, it's really important to ensure that the cost is the primary focus we suggest.
One question that I've always been curious about in terms of the calculations that banks do to make sure clients have a buffer. Obviously, interest rates are going up, and then the serviceability is calculated at a higher interest rate relative to what you're actually going to pay. But how do you account for such rampant inflation at the moment in terms of what people can actually afford, and how does that get considered into the calculation? Because I think that's where there might be a potential mismatch at the moment. Do you have a view on that?
Yeah, absolutely. There's a huge mismatch. The fact that rates have risen so much means that every loan, in my opinion, that was done in the last 12, even 18 months, you're probably at complete mismatch right now. Mm. Back when rates were in that 2% mark, most people were getting assessed with a buffer of 3% at like that 5.2%. So you were paying 2%, you felt great. You're a bit annoyed that the bank was assessing you at 5% because for some reason you just thought that these rates would last forever and a day. Now your variable rate is at 5%, maybe 6, maybe even 6.5%, depending on your structure. So technically, if you were like for like from a year ago, you're underwater. Mm. Now, that's probably a very negative view because inflation also impacts wages. So your wages have gone up, and if you have a good business, maybe your profits have increased, so you can maybe absorb it. And also in a year or two, if you're good with money, you've paid it down. So we're very fortunate our client base is doing well. But I can totally appreciate that you made a big financial decision in the last 18 months, thinking the bank was protecting you with the way it's assessed it. The RBA was protecting you because they said 2024, we're not going to raise rates, and things have changed drastically. I totally understand that anxiety can turn into anger.
And so I guess, do clients come and see you as that person that can, safeguard them against that? And, maybe you can talk about perhaps some of the misconceptions about mortgage brokers and how you address that with your clients.
Yeah, it's important, holistically as a professional service business, you're trying to provide advice, and generally advice at a point in time. It's very risky, and we never do it. We're not allowed to, and I would never do it, to think about what the future holds and like, you should do this because X will happen. We don't do that here, especially in our business, because you get caught up in these situations. The key misconceptions outside of kind of this is that the biggest misconception is that we drive the interest rate. Like when interest rates goes up, people go, oh, well, you mortgage brokers are making a lot of money. You're just like, well, not really. CBA is giving you the product. Our role is really a third-party access. That's how I kind of term it. We give you access to a product, the decisioning on that product, whether I can't approve the loan. I don't choose the net interest margin or the profit margin or anything like that. I'm just a facilitator of a good outcome at the point in time. And hopefully if I run a good mortgage broking business, I'm trying to facilitate a better outcome. So like refinancing and restructuring and buying and selling and things like that. The biggest misconception is how far we are from the decisioning of a whole bunch of things that affect your financial balance sheet, which we do try and explain that to clients. Obviously, when you're not dealing with it day in, day out and you do feel anxiety, it's fair enough to look to someone to blame, and that can be the person that helped you originate the mortgage. And it's just about having that open conversation.
Yeah, no, that makes sense.
Nice. And now, could you talk us through the pre-approval process for a mortgage and why it's important for prospective home buyers to get pre-approved before starting their home search?
I think I always say, if you look at what a pre-approval leads to, or whatever the goal of the client is, the goal is to buy a property or to buy an asset investment, whatever it might be. Generally, in our case, it's a property-based decision. That journey is ginormous. From you've probably been saving for years for a deposit, you've probably been working and building up your career or your business to have income. Then you have to go find, search, buy, bank, approval, conveyance, all these new things come into it. You have to negotiate on the house, you have to win at auction, a million things that need to occur for that outcome to be achieved. And I feel like a large part of that outcome is your finance success. Like, do you have the money to buy it? So generally, most people in Australia will need a loan because property prices are very expensive. And if you can reduce that out of the equation, if you can ensure that is as secure as possible, then the rest of the decisions become very easy. So a pre-approval gives you kind of confidence to go and bid on a property, knowing that the loan will come through, gives you confidence to know what the repayment is, gives you confidence to know that the bank is backing you, gives you the confidence to know all the ins and outs. Because when you don't know and you're making a big decision, it can be confusing, you can make mistakes. Pre-approval for me is the first thing people should do, because it just gives you a sense of what you can and can't do. I always say that, that open a door, close the door approach. The pre-approval allows you to close, well, I can't buy $1 million house. I'm not going to buy a 300 grand house. I know exactly what I'm going to be approved for, and it narrows your focus, which then allows you to go to the next stage, which is, well, I need to search for the property, and all these hard things come after it. But if you can do that first one, it does narrow your focus, and it gives you a lot of surety, especially now when rates are moving so much. It's been a very interesting journey for mortgage brokers in the last 10 months. However, every time rates increases, your borrowing capacity decreases, a new assessment has to be done. And you can get really caught out. If you got a pre-approval 6 months ago for $1 million and you're like, great, I'm just going to go now, and your mortgage broker hasn't engaged with you, or you yourself haven't engaged with your broker, you could be out of the money a big amount, which then, like I said, leads into all these problematic things that you could lose your deposit, or you paid too much for a house. So the pre-approval is a great understanding of what you can and can't do right now, then you should go and execute on that straight away.
Yeah.
Now, we've seen 10 consecutive rate rises. How have you managed expectations for your client?
It's hard. It is really hard. I think as much as you hate the media and all that kind of stuff, they do their job by spreading information. And people know that rate rises mean there's a financial change. We do it like when rates are 2%, our motto when we do things is to just give you all the numbers. Like I think most people know in their gut what they should and shouldn't do. My job and my team's job is just to show you financially what it means. But most people don't want to have a massive mortgage repayment that they can't go out. Most people don't want to have too much debt that they want to explode. So most people intrinsically know what they're doing. But our process, when we do a pre-approval or anything, when I give you, this is what you're pre-approved for, and this is the rate as of today, and this is what the repayment is, we generally just give you a very small table afterwards that says if your rate goes up 1%, 2%, 3%, 4%, this is what it could be. And we've done that for forever and a day. Just I'm not too sure why we just do that. It's one of part of the things that I think is really important. So
That's a good process.
a lot of our clients understood. Maybe they didn't think, or I think a lot of clients laughed when I said, "Oh, 6%," and even me would have gone, "Oh, yeah. We might be a few years from that. Who knows?" But we do that, and especially as every rate rise comes, our business is built on making sure you go back to those clients and say, "The heads up, like the number that you have is wrong. We have to do it again." And so it's been exhausting. The last 10 months of doing where it would have been one pre-approval, we're doing internally 10 every time it changes. And after the first few interest rate rises, we understood this is going to be a journey. So we would just give a client, if the rate gets to this is what it drops to. If it gets to this is what it drops to. If it gets to this, and we just gave that matrix. That helped, but the first few were really interesting. We're kind of used to it because it happened in an opposite effect. When they were dropping rates in COVID, people would come back and say, "What could we borrow?" And it was higher and higher every time. So we kind of had the infrastructure, albeit maybe not as robust as we do
now. What extent of due diligence are you doing on your customers sort of beyond, their assets, which is, looking for a house? Like how much further do you go to understand their financial situation? Like you can't control what your client's going to do, what they're going to buy. They're going to get a credit card after they get their loan. How do you manage that? Who do you work with? Perhaps who do you collaborate with on situations like that to make sure that you've got a holistic picture of your client position?
A lot of it, like I think a mortgage broker's role has drastically changed. Like securing a loan is just a part of our wider process. A lot of it, and I know it's the same that you guys have, Joel, a lot of it's just like financial education at the start. And a lot of our financial education is actually telling them the other service providers around us. Like your mortgage is generally, outside a dinky credit card or a car loan, your mortgage is probably the first real monster financial product that people take out. And a lot of them don't even know what a financial advisor is, don't even know what a conveyancer is, don't even know what an accountant does properly. A lot of our journey is educating them and asking them questions. Do you know what a will is? Or you don't have one? Well, here's a person, or here's a person you can talk to, and this is why it could be right or wrong. A lot of people who are getting their first mortgage are like, "No, I'll bin that for later. I'll do that later." But a lot of our journey is education around the professional services that you need around. And maybe it's because I'm a bit older and I have the professional services around me. And I'm like, "Oh, they saved my life a lot of times." So a lot of our journey is educating them not only on the finance process, but what is a good setup of advisors around you. Because I just think it's imperative, like, especially now, like I've gotten older, a lot slower than I used to be. And have more dependents at home that take up a lot more time. You do need people that are probably looking out for you because you're just a bit more tired and you don't know everything, and it's important to acknowledge that. So I try and impart that wisdom on others.
I think it's good advice and a good approach.
Yeah, really good. And can you discuss the pros and cons of a variable rate compared to fixed rate for home loan? And discuss some guidance for listeners who are thinking about this for their situation.
It's a monster topic right now. Obviously, it was a monster topic for the last kind of year or two when it was going down. The very simplistic thing is that a variable rate goes up and down when the Reserve Bank decides to change it, when a bank decides to pass it on. So they're kind of agnostic to things. Your rate goes up and down, and you are beholden to whatever that rate is, and you have to pay the repayment at that time. A fixed rate gives you certainty on the interest component for a period of time. So in Australia, most banks have 1, 2, 3, 4, and 5 year fixed rates. Some do 7 and 10 year fixed rates. And you can opt to have your mortgage locked in from an interest rate perspective for those periods of time. So you can choose, I want my mortgage locked in for 5 years and there's a rate given for you, or 2 years and there's a rate given for you. Or it can be just variable for the next 30 years. Now, the important thing that we think about in our business is no one knows where rates are going. Yes, there can be a consensus view, but really the decision when we talk to clients is how much do you value certainty? And if you value certainty heavily, you should look at a fixed rate, irrespective of what the price is of that fixed rate. Just right now, at a point in time, do you value certainty? And if you value certainty, then you should look at a fixed rate. And I give the example of my household structure. I've used fixed rates twice in my life. It was not when I thought we were at the bottom of the rate cycle and I wasn't trying to time the market because I'm not smart enough. I used it when I started Elephant. I was like, oh, I don't know what my income might be. Who knows if this is going the right way? I want certainty. And so back then, when I started Elephant 7 years ago, fixed rates were higher than variable, and I was happy to pay that premium to have certainty. And the second time I used it was when Naomi and I had our first son, Micah, and she was off work and we just didn't know where the world was going to go. And we were fortunate 2.5 years ago, fixed rates were lower than your variable rate. So I got a bit of a win. But the question always to me at fixed rates is don't try and time up or down. If you don't know, it's okay not to know. It's just about deciding how much certainty do you want right now.
Yeah, that's a great way to navigate it. Excellent. And yeah, lastly, what's one thing you're excited about this year?
Well, probably from a work point of view, I'm very excited that I hope we're at the top of this rate cycle and things just are a bit normal for a little while. It's been a pretty monstrous task the team have to take on with all the pre-approvals and all the rate changes. So from work perspective, really excited to I think we're at the top of a cycle, or at least I think banks are just starting to understand that clients are ready to go out and buy. And I think the market will be a bit more positive. Obviously, who knows what it holds, but I'm very excited to see rates. I think have scared a lot of people from doing what I think is great for them long term, buying a family home or buying that holiday home for their kids or buying an investment for whoever it might be. I think these are really good outcomes that have been on pause. And I'd love to see that change and people just press on with their life. And then from a personal point of view, not much. We had my wife and I had our second son about 3 months ago. So very excited to spend more time with him. Thank you very much. Very excited to learn how to be a dad too and not kill myself. So very, very excited for the year ahead.
Awesome.
That's great, mate. Great news.
Well, yeah, thanks for joining us today, Shehan. And
No
it's been great to get a better understanding on mortgage brokers and the great work that you guys do. And yeah, that's
amazing.
That's wrapping up this month's Money Chat.
Amazing. Thanks, gents.